Hello everyone, good morning and good evening. My name is Berhad and today our group will be making a video presentation on local company versus foreign company. Okay, these are my group members. The company chosen for local is Bintulu Port Holding Berhad, and for the foreign company it is DP World PLC, formerly known as DP World Limited. Okay, these are the overview of company. I will personally be talking about the introduction, and my other group members will be talking about the capital structure and ownership, corporate governance, policy implementation, and agency issues. Okay, these are the brief description of Bintulu Port Holding Berhad. Okay, it is located midway between Kuching, Sarawak, and Kota Kinabalu, Sabah, along the busy lanes of intra-Asia deep sea port trade. Bintulu Port operates in two segments: port and bulking activities. Bulking activities are services segment engaged in supplying palm oil, edible oil, vegetable oil, and byproducts with bulking installation facilities. Okay. For port activities, it is operation division is involved in provision of port facilities, which includes the handling of liquefied natural gas freight, petroleum products, liquefied petroleum gas, general merchandise container, dry bulk cargo, and other auxiliary services. Okay, this is our introduction of DP World. It is formed in 2005 through the merger of Dubai Ports Authority and Dubai Ports International. Dubai Port World is a logistic company headquartered in Dubai. The main activities are transportation of freight, port terminals, marine infrastructure, and free trade zone. DP World has lifted itself to the top ranks of port terminals operators worldwide. They are also the second largest port terminal operator in the world, handling more than 40 million TEUs. TEUs are 20-foot container equivalent units. Okay, these are the industry of chosen company. The first industry both companies are involved in port industry. A port is a maritime facility that may comprise one or more wharf where ships may dock for loading and discharging passengers and freight. Port also handle the greatest amount of freight as terminal, more than any other types of terminals combined. Okay. Maintaining the investment requirement of modern port operation has become a challenge for many ports. Port infrastructure must jointly manage transshipment activities on both ships and inland, and thus promote integration between land and maritime transport system. The main rationale behind the establishment of many port authorities was the ability to manage port facilities as a whole efficiently than privately owned and operated terminal. As port facility become more complex and capital intensive, it was perceived that public agency would be better placed to raise investment capital and mitigate the risk of investment. For this case, you can see for Bintulu Port Holding Berhad, they are one of the company listed in public in Bursa Malaysia. Okay. Port authorities tend to be vertically integrated entities as they participate in the activity related to operation, from construction and maintenance of infrastructure to the marketing management of port services. The second industry are the logistic. Logistic is managing the flow of things between the point of origin and the point of consumption to satisfy customer or corporate requirement. The logistic manage resource that includes tangible products such as materials, machinery, and services, as well as food and other consumer goods. Physical item logistic typically includes the integration of information management, managing products, manufacturing, packaging, distribution, transport, warehousing, and sometimes security. Business logistic encompass all aspects of market and seeks to control the outcome project of life cycle, supply chains, and the resultant efficiency.
The following is the structures of Bintulu Port Holdings. Bintulu Port Holdings hold 100% of these three subsidiaries, which include Bintulu Port Sdn Berhad, Port Bakar Sdn Berhad, and Samalaju Industrial Port Sdn Berhad. I will briefly talk about these three subsidiaries. For Bintulu Port Sdn Berhad, this company acts as an operator of multi-purpose port in Southeast Asia. It's serving the hinterland, which include the oil and gas hub. It is the largest container port and only one LNG gateway in East Malaysia. For information, LNG is one of the type of natural gas. For Port Bakar Sdn Berhad, this company involved in the provisions bulking installation facilities for crude and refined palm oils, edible oils, vegetable oils, and fats and their byproducts. For Samalaju Industrial Port Sdn Berhad, the company acts as an operator of a purpose-built port that provides dry bulk and break bulk cargo service to the industry operating within the Samalaju Industrial Park and its hinterland. This company is dedicated to energy-intensive heavy industry that engage in the aluminum smelting, steel, oil refining, silica-based enterprise, marine engineering, and a wide range of industrial and commercial activities. Bintulu Port Holdings is listed on the main market of Bursa Malaysia since 16 April 2001. The following is the 5 major shareholders of Bintulu Port Holdings, which include Petroleum Nasional Berhad, State Financial Secretary Sarawak, Equator Asset Sdn Berhad, Kumpulan Wang Persaraan, and Public Interest. The remaining 22.62% of the shareholdings in public include Pemodaran Nasional Berhad, Urus Hatta Jamaah, Malaysia International Shipping Corporation, Employees Provident Fund Board, and a few of small shareholders. On the other hand, this is the structures of DP World. Dubai World Corporation acts as an ultimate parent company. Port and Free Zone World FZE act as an parent company. DP World act as the company. So the ultimate parent company hold 100% at the parent companies, and the parent companies hold 100% of DP World. Based on the data below, the group has significantly increased the number of subsidiaries, associates, and joint venture from year to year. As you can see, the number is increased from 66 in 2015 to 93 in 2019. These are the capital structures of Bintulu Port Holdings. And Bintulu Port Holdings utilize these 6 capitals for the operations of business, which comprise of financial, intellectual, manufacture, social, human and relationship, and natural. However, for DP World, they focus on 4 main capitals for the operations of business, which comprise of financial, gross capacity, people, and operational.
Hi everyone, my name is Diandra Romaldus Rainier Joseph, and I will present about the corporate governance and the strategy policy implementation on the next part. Corporate governance can be defined as a form of process or structure helps in directing and managing business and affairs of a company to promote good corporate value and accountability with the objective concerning long-term shareholder and stakeholders' value and interest. It provides framework for company to achieve its goal, thus avoiding unwanted conflicts. The manner of corporate governance in Bintulu Port Holdings Berhad, where the principles and the best practices of the code in all material aspects are targeted to comply with the Malaysia Code of Corporate Governance, MCCG Code of Corporate Governance Conduct. DMCCG was introduced in 2000 and reviewed in 2007 and 2012 to ensure that the code remains relevant and aligned in accordance with the best practices and global standards. On the other hand, DP World Limited is incorporated in Dubai International Financial Center, the IFC, and admitted in 2007 to the official list of securities on Nasdaq Dubai. Differ from BPHB, DP World Limited therefore must comply with the regulatory obligations of the IFC markets law and various rules by Dubai Financial Services Authority. The objectives include ensuring international competitive and accessible market, maintaining fair, orderly, and market transparency, providing strong and liquid market towards issuers, investors, the IFC, broader Gulf Cooperative Council region, and financial community internationally. Adhere the international standards of securities trade, minimizing overlap with the market rules of DFSA, as well as enable to impose fair and transparent manner of rules. Upon analyzing the BPHB corporate governance for the last 5 years, the format presented in the annual report AR for 2015-2016 shown that BPHB corporate governance was based on 8 principles, while for 2017 to 2019, the company's corporate governance was based on 3 principles as you can see on the screen. While for DP World Limited, the board reviewed and monitored the policies and procedures to be complied with its practice of corporate governance, principles of Nasdaq Dubai rules, which includes leadership, accountability, position and prospects, as well as the remuneration, with the 7 principles in total, as you can see on the screen. The further corporate governance analysis for both companies will be based on the 4 pillars in corporate governance, which include first pillar is the ethical behavior, second pillar, accountability, third pillar, transparency, and fourth pillar is the sustainability. First pillar is the ethical behavior. For Bintulu Port Holdings Berhad, the companies have the company's directors' code of ethics. The staff are required to adhere the code of conduct, discipline, and positive behavior performing duties. The whistleblowing policy was established in September 2014. There is a performance assessment for board PFD adopted since 2014 for board and committee evaluation. On the other hand, for the BP World, there is a presence of internal controls which includes the organizational structure, strategy and financial management, policies and procedures, and so on. The guideline towards insider trading with the share dealing code setting out restrictions in securities trade, and there is a presence of fraud prevention measures which include the anti-bribery, corruption policy, fraud policy, and fraud incident response plan. The second pillar, the accountability. For Bintulu Port Holdings Berhad, the committees include Audit and Risk Committee, Nomination and Remuneration Committee (NRC), and the Finance and Investment Committee, established with the terms of reference TOR defined by the board. There is other committees, management committees at the subsidiaries level. The chairman and CEO positions are held by the different persons, and their roles are disclosed in board charter. The audit committee comprises majority of independent directors, the Ernst & Young PLT being the external auditors being appointed every year. The company secretary also appointed for the years are qualified and competent. The director's remuneration was set by the Nomination and Remuneration Committee. For DP World, 3 principal board committees are present: the Audit Committee, Remuneration Committee, the Nomination and Governance Committee, formal delegated duties responsibility with written terms for each committee respectively. There is also a presence of other committees in the company, the presence of which management framework, met number of times and oversight on the principal risk, establish a control framework operations, positive shareholders engagement for the whole years, for the 5 years and with the various planned programs and meetings. KPMG LLP being the external audit performing audit engagement reappointed every year. The company secretary appointed for the years is qualified and competent, and the remuneration committee meets formally at least twice a year and otherwise as required. For Bintulu Port Holdings Berhad, produce accurate finance. For Pillar 3, the transparency, Bintulu Port Holdings Berhad produce accurate financial reports and good internal control mechanism. Implemented its procedure for corporate disclosures consistently for the 5 years, timely release of quarterly financial result, investor relation, company's website providing various information. The policies, remuneration, and decision are made transparent. detailed disclosure on name basis of individual directors and top management. However, the fully disclosed is not adopted. The annual report provides full disclosure and comply with relevant regulations, maintaining high transparency. However, the option to produce integrated reporting for every year are departure except for AR 2019, where Bintulu Port Holdings Berhad produced its first integrated annual report. The board reports consist of financial, operational, corporate, regulatory, business development, and audit matters. The AGM remains the principal forum for shareholders, and through analysis, BPHB held its AGM for the last 5 years, allows them to review BPHB performance via company's AR. For DP World, there is a presence of view distinguishing the respective responsibilities of directors and auditors in relation to the consolidated financial statements. Reports presented are accurate, balanced, and understandable assessment of company's financial position and prospects. There is a full description regarding board decisions available on company's website. Company's performance reported to the investors via announcement, presentations, or conference calls. The useful company's website providing various information, annual report and financial statement, latest corporate financial and market information, same as Bintulu Port Holdings Berhad. Shareholder engagement seems to be positive with various planned programs and meetings held for every year. There is an effective dialogue between board and shareholders. Pillar 4, the sustainability. On the left side is the Bintulu Port Holdings Berhad. The sustainability includes the continuous improvement based on customer feedback guided by customer charter. Corporate sustainability includes environment and social impact of business, PAB conducted internally upon financial year completed, structured risk management framework, procedure to mitigate business and risk operation, various division, and group corporate planning and development, the statement on risk management and internal control as well guidelines to directors, listed issuers for risk profiles on a biannual basis was performed. On the right side is the DP World, where the sustainability includes development, recommendation, strategic plans and policies, monitored operation and financial versus budgeted plan, prioritize capital allocation, technical resources and risk management, and board and committee evaluation process was held for every year, includes self-evaluation, interview, consolidate and report, review planning for enhancement, good corporate governance. The corporate governance issues in DP World, with reference to the AR, compliance statement of which DP World Limited complied with provisions set out in Nasdaq Dubai rules other than in 2015, the chairman failed to meet the independence criteria of Nasdaq Dubai rules. 2016, the positions of chairman and CEO are held by same individual and company's chairman failed to meet the independence criteria. 2017, the same issue presents where the positions of chairman and CEO are still held by same individual. And 2018 and 2019. For the Bintulu Port Holdings Berhad, BPHB, the corporate governance issues, first is the detailed disclosure on name basis of individual directors and top senior management. Fully disclosed is not adopted. Received remuneration for the years are present. There is a departure to produce integrated reporting based on globally recognized framework for Annual Report 2015-2018. The actions taken upon departure was BPHB produced a comprehensive sustainability statement. The board diversification are disclosed in the AR. In 2018 and 2019, only 25% and 27% respectively female representative in board. That is not adhere to the rule of at least 30% women of directors. Other disclosures stated in the company's report on corporate governance of which this company did not adopt are the policy which limits the tenure of its independent directors to 9 years, the establishment of risk management committee which comprises a majority of independent directors to oversee the company's risk management framework and policies. The next part is the strategy, policy, and implementation. First of all, policy is defined as the set of rules or principles used to direct organization towards making decisions, while strategy is defined as unique plan made by a company to achieve market position as well as the company's goals and objectives. At the earlier stage, BPHB business strategy for success are divided into 3 phases spanning from 2016 to 2030. However, in 2015 and 2016, Bintulu Port Holdings Berhad has different strategy policy before the company introduced new vision and mission on 28th of February 2018. Starting from 2017, as part of the company's long-term strategy, They employ three specific strategic thrusts to achieve their business objectives and to sustain growth over the next 5 years. The changes, however, was not much differ from the previous strategic policy in that each year, various activities or implementations to drive the strategic thrust had been implemented to as well meet the company's goals and objectives. The company's strategy to success is not only based on its strategic thrust and policy, but also involves company's business plan, enablers, and corporate values, the company's strategic pillars, business plan, enablers, people, corporate governance, process and system, and its corporate values. Framework, integrity, innovation, and professionalism are believed to uphold the company's vision and mission statement. The company's strategic policy in 2015 and 2016 can be shown as on the screen. The new three strategic thrusts employed from 2017 to 2019, as summarized in the screen, there is a three thrust. The first thrust is the instituting operational excellence to reduce inefficiency and finding new levers to drive improvement. The second thrust, expand port and capitalizing on key growth markets and profitability. Third thrust, embark into smart and green port. The strategy implementation for Bintulu Port Holdings Berhad, as you can see in 2015, creating a long-term consumer and employee value through corporate sustainability approach, the environmental considerations implementations, enhancement customer experience, such as customer-focused organization and satisfaction KPI, emphasis towards process improvement, productivity enhancement, and capital expansion. In 2016, the implement planned CapEx projects, new project, ventures, comprehensive feasible evaluation and risk assessment, leverage expertise for the ports, expansion logistic value chain, provide specialized value-added service for customers, and venture towards new business development. In 2017, improve productivity, efficiency, and service level with respect towards improvement, expanding of port capacity, market, the projects, developing new plant facilities, the broadened market, which they signed the memorandum of agreement with Petronas LNG, the various activities for staff and management, the Green Port and Automation Innovation Initiative. In 2018, initiated a feasibility study, development of infrastructure and procuring container handling equipment, leverage expertise, implemented and commissioned the new enterprise resource planning (ERP), commission of smart digital green port, reputation management and branding workshop, implementation of BBSB revised tariff. In 2019, review the subsidiary audit transformation, launch various projects under operational excellent performance delivery internship, explored new cargo opportunities, involved in agreement with the companies handling in bunkering services, facilitate distribution vehicles, the increase in connections with regional and international counterparts, and commission of the smart digital green port blueprint by Bintulu Port Authority as continued from the previous years. On the other hand, DP World adding value to the businesses through the marine and inland trade infrastructure and services as well as through the smart trade solutions. The leading towards their businesses involves various key strategic implementations such as through customer focus and operational excellence, government and risk management, people and culture, and therefore through sustainability. In terms of the company's strategic policy, 2015 and 2016 has a similar strategic policy, and after that, there has been some changes adapted from 2017 to 2019 with each year. Various types of strategic implementation has been implemented, which can be specified and summarized as below. The company's strategic policy can be shown on the screen, as you can see. Develop and operate a world-class portfolio, identify unique and visionary opportunities, and manage and risk and return for 2015 to 2016 before the changes from 2017 to 2019, which includes drive profitable and sustainable growth, develop new revenue, maintain strategic advance to investing in digital. So the strategic implementation for DP World is that in 2015, there's an integration of acquisition and significant investment in existing portfolio and the capital expenditures. new capacity of automated deepwater development, launch renewable energy project, community investment, real-time monitoring global operations, provided training and performance face-to-face and online. In 2016, developed and operated a new logistics center, created additional capacity in Jebel Ali. And other business branch launched global education program and solar program, raised fund in sukuk and refinancing, extended of debt maturity profile, involved in billion investment platform, innovations to increase business securities and launch automated machine and collected idea through online portal. 2017 created new capacity at various branches, online modules, sustainability, the embarked plan on developing free zone in Somaliland, developed 2021 Global Technology Strategy. In 2018, a strategic skill development program, acquisition more asset in ship and rig companies, launched new container storage and stacking project, new application of wide range technologies, launched new sustainability pillars, and so on. While on 2019, improved container terminals operation, acquisition of various companies, transformed greenfield terminal into integrated maritime and logistic hub in South America, launched advanced course focus on developing leadership capability, enhancing leadership culture globally, various training and program activities for employees. To summarize, the comments on the company's strategic policy and implementation, as you can see on the screen, first, both DP World Limited and Bintulu Port Holdings Berhad has an experienced management expertise with the launch of various strategies for the last 5 years, with various transformation involved in terms of increasing their leadership, management enhancement, and operational strengths. Both DP World Limited and BPHB concerned with the environmental, people, and economic consideration. Where DP World Limited, they seems to be investing into educations and communities such as school programs worldly, launching of global education programs where BPHB is lack of. BPHB, however, focusing towards its corporate social responsibilities as CSR, in the coverage within its social environment such as communities in Bintulu and etc. Bintulu Hot Holdings Berhad has annual customer engagement, annual customer satisfaction survey, customer focus, and satisfaction such as KPIs, whereas DP World Limited seems to have its own ways of interaction, online system management, and performance management tools since long. DP World Limited is highly global company market compared to BPHB in terms of its diversification of operations, branches, and developments. DP World Limited has implemented its green project, renewable type of energy in its business operations since long time ago, while BPHB was still in the early phase embarked towards the digital automation and green port initiative. Acquisitions of asset, capital investment, refinancing, and joint ventures activities are more active in DP World, since DP World is an international company compared to Bintulu Port Holdings Berhad. Even though Bintulu Port Holdings Berhad is a local company in Malaysia, there is a potential growth to expand its diversification, embark into new organizations and branches in other states in Malaysia. With the newly signed memorandum of agreement with Petronas LNG regarding gassing up and cooling down services in 2017, seeing that this company have the potential to become a competitive advantage to other companies in the same industry. That's all from me. Thank you.
The following is the agency issues. Both companies have many issues, but we only focus on the 3 major material issues which is significant to the business risk. For Bintulu Port Holdings, the agency issues is IT system and cyber threats, human resource development, and port security. For DP World, the agency issue is macroeconomic instabilities, complex legal and regulation across countries, and the political instability. For Bintulu Port Holdings, the first one is IT system and cyber threats. The company has increased the usage of mobile device, IoT, cloud applications, and the involving of sophistications of cyber threats. This will lead to corporations being cyber attacked by unauthorized attempts because the company claimed that they didn't update the firewall and not install the latest IT program. The second one is human resource development. The company have low capabilities in the area of leadership, knowledge, skills, behavior, and value. This is because they fail to attract, develop, and retain talent continue to work for the company. With that, the company actually exposed to the inherent risks as they didn't apply the performance management systems. The Employee Engagement Index score is also achieved 60%, which is fall below the target, which means there will be less connections and a big gap of relationship between the corporate and the employee. Another issue is the security around the Bintulu ports and the gateway terminal. The company do not install the intelligent surveillance system that can automatically detect unauthorized approach. This means the port directly exposed to this unauthorized target. For DP World, the first one is macroeconomic instability. According to IMF, the 2019 world economic growth rate is achieved at the lowest of 3% since the recessions at 2009. The company remains uncertainty over the China-US trade wars and also the Brexit. This will impact the financial performance and the profits of the companies. Secondly, the DP World is a worldwide company across 50 countries. This means the company is subject to the local, regional, and global law and regulations across different jurisdictions. Law and regulations are becoming more complex, increased stringent, and subject to various legal and regulatory obligations. Hence, the new legislations and practice could impact the operations and increase the cost of compliance. For example, the introductions of EU GDPR. GDPR stands for General Data Protection Regulations. Lastly, the political instability has changed the regulatory environment of taxations. International sanctions, expropriations of property, silver strike, act of war, and etc. This will disrupt the company operations, increase costs, or negatively impact existing operations, service, revenue, and volume. This political issue continue to increase due to the recent geopolitical tensions, escalations in the Middle East, as well as the civil unrest, such as in US, India, Hong Kong, and other Europe countries.
Hello everyone, I will present on a SWOT analysis for both companies in overall view. Let's begin with Bintulu Port SWOT analysis. The strengths are the financial resources, having good relationship within the community, and build strategic relationship. The weaknesses has been identified in terms of reliance, incurred high costs, and lack of procurement management. The opportunities are the main export operator for palm oil production of Sarawak, become sole LNG export gateway for the nation, and adoption of smart digital green port blueprint. The threats are the emergence of new competitors in Sarawak and high capex costs. Next slide is the detailed explanation for the strengths of Bintulu Port. Financial resources are the strengths for Bintulu Port as it delivered a stable financial performance throughout the year. As you can see, there is increases in number from 2015 until 2019 in their operating revenue. The revenue was contributed by LNG productions that serve as the main contributor to the port's earnings. Overall, over the past 5 years, Bintulu Port revenue has grown about 31% from 2015 until 2019. Bintulu Port also has good relationship within the community. Bintulu Port has engaged proactively with their community by taking good care of the community in providing annual in-kind donations to Bintulu Hospital, create sport events, and raise awareness of the community. Having good corporate citizenship has proved Bintulu Port has established a better impression to the stakeholders and also for the society. This has become the strength for Bintulu Port to grow further. Next, Bintulu Port also has built strategic relationship with famous organization Petronas LNG, which has strengthened Bintulu Port to diversify their revenue stream, which demonstrated the ability in delivering liquefied natural gas LNG vessels to non-Petronas LNG vessels in terms of gassing up and cooling down services. By targeted to serve at least one vessel per quarter, is seen will create a better value proposition for the customer. GeoCD services are only available at specific locations in globally. Now, here is the weaknesses of Bintulu Port. In terms of heavy reliance on LNG production, LNG is much easier for transportation and storage. However, the tanks for storing the LNG are expensive and lead to high costs. Since LNG is the main contributor to the revenue, when there is a weather factor, the delivery of LNG could be slower and affect the performance. In 2018, revenue and cargo throughput was declined in LNG shipments. Moreover, Bintulu Port also lacked with procurement management. Procurement management is related to direct negotiation process, tender process, consultant and contractor appointment, and contract clauses. This has weakened Bintulu Port performance as it could be elementary of criminals were present in the presentations of data. This is the opportunity for Bintulu Port that has been identified throughout the analysis. Being main export operator for palm oil production in Sarawak has created the opportunity for Bintulu Port to grow further. It has seen in 2019 achievement when non-LNG cargo sector has recorded growth rate over the national growth. Bintulu Port has handled 4.51 million tons of palm oil in 2019 against 3.65 million tons in 2016, which resulted from strong relationship with China, India, Pakistan, and United States. Moreover, the development has been in line with the growth of Sarawak planted area, whereby Bintulu Port has handled of 23.6% of total Malaysian palm oil export. Besides that, Bintulu Port also recognized as sole LNG export gateway for the nation. Create engagement with China for a contract that has started in 2018 until 2022 in Samalaju Industrial Park has provided the capability of plant production capacity up to 10 million tons annually. Lastly, Bintulu Port also adopting digital blueprint known as Smart Digital Green Port Blueprint with Bintulu Port Authority. Bintulu Port has prioritized its management activities and growth based on economic, environment, and social as the main pillars towards digitally industry. There are several threats that has been identified in Bintulu Port, including emergence of new competitors in Sarawak. There is high demand in palm oil productions, which open up the opportunity for diverse competitors. Due to that, Bintulu Port has to struggle in producing better services to their clients by improving their bulking facilities and services. Besides that, Bintulu Port engage with high capex costs, whereby they have the tendency to incur greater costs in terms of capital project, acquisition of property, plant and equipment, and upgrading of existing assets. Due to active operations in Samalaju Port in enhancing larger capacity vessel, Bintulu Port is likely to incur high costs. Thirdly, Bintulu Port also has the environmental issues and new shipping alliance. Moving forward to DP World Company, the strengths are the financial resources, innovative and smarter digital solutions, having global footprint across multiple geographical locations. The weaknesses has been identified in terms of reliance on container handling, high burden of debt, and increased operation costs. The opportunities are diversification in digitalization of logistics services, having new shipping route, and investment in specialized handling equipment. The threats will be US-China trade war in terms of tariff and foreign exchange rate exposures. The strength of this company is through its financial resources. Overall, the past 5 years' performance has shown positive figures that could be concluded that DP World has served the best quality in their services and products. From 2015 until 2019, it has increased about 90.3% in their operating revenue. Besides that, it also has innovative and smarter digital solutions, which has improved the internal activities as well as expanded their existence across the supply chain. Not only that, by investing into the latest technologies, the efficiency and cost savings could be achieved across the fuel portfolio. Global footprint across multiple geographical locations, biodiversified over Americas, Europe, and Russia, Middle East and Africa, subcontinent, and Asia Pacific in logistic, marine services, parks and economic zones, as well as deep sea ports and marine terminals, has strengthened DP World in their operations. The weaknesses of DP World is identified in terms of reliance, in which DP World is over-dependent on container handling. Since container handling could be affected by geopolitical issues, the volume, growth, and profitability will be likely affected too. Next, high burden of debt is a concern where DP will consume a huge number of facilities, assets, and number of employees, as well as the liabilities. Based on the ratio analysis, stated that DP World has financed more than half of its assets with debt. DP World has high reliance on borrowed money to finance its business operations. In addition, the operation costs have increased. The total of operating costs is USD 2.5 billion as compared to USD 2.2 billion in 2018. It has incurred high maintenance and services expenses as it is global company. The opportunity of DP World is through its digital diversification. DP World has diversified its logistics services to be more digital by working in partnership with Threadless. The transformation in making the cargo digitally will contribute to opening new commercial opportunities for their customers even during economic downturn. Next, DP will also acknowledge with new shipping routes that consume less time to deliver their products or services. It enables DP World to operate their cargo handling over the terminals in short of time. Lastly, investing in specialized handling equipment gives the opportunity for DP World as approximately 5 million of TEU of new gross capacity in 2016 has been added as an early investment in deepwater facilities, which encourage them to take advantage over those trends. The threats are US-China trade war on tariff, in which the impact from tariff due to the US-China trade war has weakened Eurozone performance. The war between US and China has affected volumes on Trans-Pacific market, with losses on China export partially offset by higher exports from Southeast Asia. Lastly, foreign exchange rate exposures. The changes in exchange rate influence on DP World operations and profitability. Since DP World collaborated with many foreign countries, being their customers, the transaction exposure were greater on the exchange rate fluctuations where DP World has to deal with making and receiving the payments of their obligations in foreign currency. Next, way forward of the company. Bintulu Port and DP World has implemented strategies to remain competitive in the industry. Both has proved wide diversification and practice good governance as well as managing with strategic thinking has created values to the company performance. Although both ports a certain number of strengths and opportunities, the management team has to rectify their vulnerabilities and be vigilant about the risks. For Bintulu Port, it has obtained the recognition as the third company with the largest productions of LNG, has empowered Bintulu Port to become globally competitive. The engagement with international players such as China, Japan, and Indonesia has created the opportunities for Bintulu Port to deliver a world-class logistic in a comprehensive and effective manner along the logistic chain. Lastly, being ranked as the second largest LNG terminal in the world in a single location, as well as the third largest exporter of LNG in the world has proved that Bintulu Port could drive sustained long-term value in achieving their goals. As for DP World, it has built reasonable amount of reputation as competitive and becoming productive niche ports. DP World has multinational manufacturing operations as well providing quality maritime services, has boosting the development of logistics and grow into the new markets. Despite might incur high compliance costs due to vast number of rules and regulations, DP World managed to overcome their weaknesses by handling their productivity efficiently. In terms of operations reliance, Bintulu Port having a strong reliance on their key customer, particularly in Samalaju Industrial Park area. It is too risky for Bintulu Port to overdependent on their major customer, as this could lead to reductions of revenues and cash flow. Therefore, Bintulu Port has taken initiative to diversify into non-LNG sectors such as palm oil, container, dry bulk, and oil and gas. Through intensive diversification, Bintulu Port could reach the targeted volumes in delivering shipping vessels. As for DP World operations, they were overdependent on container handling. Since container handling could be affected by geopolitical issues, the volume growth and profitability will be likely affected too. To manage the issues, DP will remain concentrated on freight origin and destination that is less vulnerable to economic uncertainty. It might impact on the volume fluctuations in short time, but compromise greater result for medium to long-term prospect. By continuously control over the cost, DP World will be able to offer high standards of quality in meeting the needs of customers. Next, in terms of digitalization's investment, DP World and Bintulu Port has included the investment in the latest technology that is necessary for future growth globally. The investment will give favorable values to both companies in terms of efficiency, effectiveness, and cost saving across their wide portfolio all over the world. Let's proceed to business risk management. First, conducting actively risk management of business operations will escalate the operations reliability to remain competitive. Both companies are participated in major projects that increase the company's profitability. Major projects could riskier the company's performance as well if the project management team could not complete the projects in a timely manner. For example, unexpected site circumstances resulted delays on the projects and incurred more expenses. Strategic procurement and deployment controls of equipment are taken into consideration over the lifetime of projects, with specific roles being delegated to the project management team as well as the procurement efficiency team. Secondly, Bintulu Port and DP World has proved that they could offer a better living for their employees and clients through operational safety and environmental protection. Maritime and logistic industries have huge range of health and safety risks as such in handling heavy equipment. Due to that, both companies has conducted HSE governance as to controls, measures, and make sure the procedures are integrated throughout the organization. Additionally, Bintulu Port has introduced a robust health and safety system to protect its workers from possible occupational hazards and accidents. As a result, Bintulu Port has also been awarded OSAS 18001-2007 certification as the establishment of a workplace safety culture. In comparison to DP World, it has established HSE assessment and controls at interval of no more once every 3 years. With efficient risk management in terms of planning, executing, and measuring, the potential impacts could be eliminated strategically. Implementing safety policy at workplace will create a safe and secure working environment. Lastly, environmental issues. Issues such as bad weather, natural disaster, and etc. are unavoidable and directly will affect the delivery reliability. In general, it will affect the operational and financial of company performance. Bintulu Port undertaken strategic plans to become a smart port to ensure the sustainability in a long-term effect. DP World has embarked in mitigate the risk through a strategic planning, infrastructure modification, and retrofitting to tackling the climate change in delivering services so that any incidents could be wiped out. Bintulu Port and DP World have the capability to maintain an optimal risk-return trade-off and increasing the value of the company. That's all from me. Thank you.
Okay, greetings. My name is Muhammad Asik bin Radwan. Today I will present about financial statement analysis. Okay, ratio analysis, Bintulu Port vs DP World. First of all, liquidity ratio. As we can see from the company liquidity ratio fluctuates in 5 years. In 2016, both companies show its best performance in ability to pay its current liabilities. Since the company is providing services mostly, the quick ratio is the most is the same with the current ratio, and both recorded high amount of cash compared receivable. Comparing the ratio in both companies, Bintulu Port have more strongest ability to pay its short-term obligation. Next is activity ratio. Equity turnover ratio. Bintulu Port here show its efficiency in equity management exceed performance for DP World. But to be fair, DP World trend was more progressive, where its performance increased from 2017, but the Bintulu Port fluctuates much with significant drops of ratio in 2016. It is because the low amount of concession revenue start from that year. Next is account receivable turnover ratio. Bintulu Port performance in collecting debt dropped since 2017 significantly, where their good rating debtors have decreased their debt to Bintulu Port. For DP World, the debt collection drops since 2018 because of the impact of many perspectives such as the drop in global market. Other than that, they might have lowered their collection period at the time for certain subsidiaries. Next, leverage ratio. Proprietary ratio. The Bintulu Port shows that they have lower contribution of equity to the total asset, and that is because the large amount of their fixed assets are concession, while the DP World had contributed most of their fund to capitalize asset, and it became at lowest in 2019 because DP was so active in the development of their asset and acquisition new subsidiary. Therefore, it increased their loan significantly to cover their plan, and accumulated of trade payable increase. Next is profitability ratio. From profit margin ratio, the Bintulu Port has recorded higher net profit margin ratio since 2017. This is since the company stopped receiving significant revenue from concession and incurred expenses for construction and start back to their normal class of income from its service and operation only. For the DP World, after acquisition of Viewport and EZW Dubai, the expenses for cover its operation increased significantly, making the net profit margin low after 2017. Next is return on total asset. Both of the company mostly depend on its total asset and manpower for generate revenue. The Bintulu Port has capitalized a few assets that significant but not significantly, but the revenue dropped since end of concession construction. But after opening their new subsidiary, they get back on the track and return to the ratio. It tells that they generate profit by asset efficiently. For DP World, there are so much new assets were capitalized during starting 2017, and the net profit seems not increase so much, making the ratio drop. The performance drop start 2018, and it caused by world economic factors such as US-China trade war began 2018. Next, return on equity. Both recorded high amount of ROE because they incurred profit every year. Next, earning per share. DP World earning per share increased progressively, showing that the business was very active, while Bintulu Port dropped their EPS since 2019 and its affect their market price. And then price earning ratio, the share price of Bintulu were high in 2015 and until 17, and it started decrease after there's no more income from concession. This was very affecting the ratio, as you can see from the figure, while the price for share for DP skyrocketed at 2017, but it dropped significantly at lowest in 5 years. Even the EPS is increased, but it's not affecting so much to the market share. Next, financial report summary, performance summary. For Bintulu Port, as you can see, the revenue at 2015 increase and 16 is higher than others because it is a peak for concession revenue income, where its end on 2017, dropping around to 29% as shown above at the slide. Bintulu Port getting back on the track income for only their original operation after Semaraju Port start to commence phase by phase within 2019, and it show increase of revenue for their operation service. More, after the Semaraju commencement, the expenses gradually increased minus the concession cost since then. In addition, the increase of expenses also because of their Sukuk bond loan, where it has started generated revenue. Overall, still too early to judge the full performance after commencement of Semajo because Semajo just operate almost 100% since 2018. Next is DP World. After the DP World acquired the Economic Zone World (EZW) Dubai, the revenue increased 31% since then, and its contributed growth of income in 5 years. Despite of the report of global macroeconomic factor affecting their growth, EZW saved them to the growth of their revenue, plus the acquisition of new subsidiary also contributed to the growth. On 2018, the significance of admin expenses and finance costs increased because of EZW commencement, and they start to pay sukuk bond profit expenses since the commencement of EZW. Their finance cost consists of loan, bond, and sukuk. Hedge cost because there are so much subsidiary overseas. Next, EPS increased because of mainly income from EZW, and net assets dropped since the convertible bond increased. This company have many subsidiaries all over the world, so they may have faced many threats of business from macro environment. Okay, next, risk in revenue management. Bintulu Port. First point is dependent to government. The income distribution is depend on investment from the industrial that attracted by government. The Bintulu Port has no part in playing involved in attracting investment. Next is income segment. The income received mainly from handling gas cargo only. Without it, the port will be in huge loss. There is no initiative in increasing new significant source of income being implemented. Third is marketing. Lower of marketing approach making their revenue stagnant. Not approach, for example, they not approach potential customer and more. And lastly is pricing. There's no comprehensive study every year in determine the pricing in line with the cost increase over the year. This is same with DP World also. Okay, for DP World global factor, this company have many subsidiaries all over the world. The company exposed to many threats of business such as the macro environment, geopolitics, and world politics such as tariff and US-China trade war. But their revenue have increased even a small drop of revenue from container handling service and port service charge. From the receivable, the drop of receivable fund may have worrisome. They should equalize the collection policy for all subsidiaries. And lastly is the currency. They might have lost their hedging strategy. Thus, they should identify more good terms that favor them most. Okay, that's all from me. Thank you.
Okay, based on our findings in the project, this section talks about the future potential of Malaysian companies to become a recognized global company. This is from the perspective of Bintulu Ports Berhad. Okay. Since Bintulu Ports Holding Berhad is highly dependent towards the sector of LNG, diversifying into non-LNG sector could increase the company's potential growth, such as in the areas where the company is looking forward to increase the investment capital into palm oil, dry bulk, and oil and gas, where there is a current high demand towards a wood-based containerized cargo. Okay, next one is leverage expertise from Bintulu Ports Holding Berhad into other large companies, making investment towards sharing of expertise, developing new ideas towards exchanging expertise locally, and aim for global connection. Segregation of expertise from within an industry while taking into consideration the independence towards the company. This might interact global attention and increase the exchange of knowledge from respective experts. Generation of new ideas and innovative, better enhancement and operational management skills, which could increase the business effectiveness and efficiency. Okay, next. They can also improve the container terminals operation using a disruptive technology known as high bay system. That is also known as HBS. As stated in the Bintulu Ports Holding Berhad Annual Report 2019, the group CEO message, of which the current global trend that could positively impact the future's company business through the conversion of some types of cargo into modular forms, leading towards the consumer operation for containers use consequently lead to increase the containers volume transported at the port. With additional invest in HBS, it can double the business containers operation at the port. Okay, lastly, Bintulu Port should increase the service they provided such as shipping, maintenance, since they have big space and as we can see in the map, you can find that inside the website. Okay, beside that, they should invest in a property development business in Samalaju area, which will increase their income like DP World, where they acquire EZW and they rent it out, plus giving infrastructure service for customer. We actually wrote more inside our report. You guys can also check that out.
In conclusion, both companies have achieved a good result in the aspect of financial, but there are limits to the certain risk. And this company is continuing to create the value through the sustained executions of the strategy plan that was formulated years ago, and then they will use these strategies contribute a better financial performance in the futures. To lower down the risk, both companies has applied the enterprise risk management framework so that they can provide a reasonable assurance that key risks are managed to the acceptable level. For Bintulu Port Holding, they are aware that challenges to the business will persist whether they come from the external or the internal, but they are already prepared to overcome this. So, to unlock more value, Bintulu Port Holdings already start to implement the operational excellence initiative to improve the process, open up the new business line, and take steps to improve corporate governance. For DP World, they will continue to expand the business around the world with a total of more than 150 operations in 50 countries. By using the enterprise risk management framework, they will continue to monitor and evaluate the emerging risks. So, the DP will able to identify and analyze the potential opportunities and the threat they could present. That's all from our presentations. Thank you.